There it is. That's all I had to do. Switch over the stream key. Alright, there we go. Should be all set now. DWAC is looking pretty good, huh? There you go. Now you guys should be able to stream in 4K. Or not 4K, 1080p. I had my stream key auto-generated. It's been a while since I've went into streaming straight from YouTube. We've had some good movers this morning. DWAC's getting a good push, along with CFVI. These two have been moving in sympathy with each other. Both of them have been trying to bottom out. They've been in a range the last few days. We got AMC trying to gear up, get a nice bounce up to 20. That's a nice $1 potential. A lot of people have their eyes on Twitter. Twitter got drilled down after that earnings. We could see a nice bounce on Twitter. AFRM had a big sell-off yesterday. But the thing with AFRM, it already did its dead cat bounce. It did it right here yesterday. So if anything, we'll see a bounce up to just under 60 bucks on AFRM if it gets that momentum. The SPY is trying to pull back, gear up for a nice explosion up. Will probably bounce up here to about 454. 4 points up. We've been holding that previous day's close. It's been a battle. Rome C caught a good 80-cent move on HTCR this morning. Nice. Good job, man. Look at you too, man. Paying attention to those new IPOs. That's where the plays have been. Awesome. Yeah, this has been the theme recently. Newer name IPOs. All of this year, the last over a month, new name IPOs. The thing with these new name IPOs, though, they like to have maybe one good green day, and then after that, they slowly just crumble all the way back down to where they came from. Yeah, that's a real good one. Rome, good job, man. She wedged out 2 times. Yesterday she opened and all day it just wedged out right there. And then today it got a nice gap up. I think by paying attention to that gap up right there, that should have gave you a hint like, yo, I better pay attention to this. And all it did, it pulled right back to the area it broke out from that wedge from yesterday. Right at that $5 area. If you would have just focused on that area, $5. And the previous day's close is there too. It wedged out this morning. First half hour of the day, right from 525, explodes up $1, just about. Very nice. that's been a real big thing with these newer name IPOs. Like you're calling out right now, DRCT. They have to come back and break over their highs to get a good push. IPOs have been hot for a while. Like the last 2 years, they've been hot. Remember back early or all of 2020. 2020 was the year of the IPOs. The gap up is exactly why I was all over it today. Awesome job, man. Just keeping it simple and looking at that big picture. It was screaming to you, foolish. Solid job paying attention to it. Yeah, you did an awesome job on that, man. There was another stock that had a similar setup this morning, but it had failed follow through. It was DCFC. Same exact setup, pretty much, as that DRCT or HCTR. This was the #1 stock 3 days ago. And after it hit 20, it did nothing but just sell off and sell off all the way down to 1250s and flatlined. This morning, we were getting a nice gap up. A lot of people were probably getting super excited on it this morning, thinking it was going to ramp back up to this area up here. But as soon as that market opened, she flushed. That should just go to show you that pre-market trading, I hate pre-market, you guys. I hate it. I'm never trading really pre-market. When that market opens, I'm not looking to trade. There's just so many false breakouts from pre-market. Same thing pretty much happened with KSCP. No follow through whatsoever. Look at that sick fade after it had that wicked run. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. No bounce. Snapchat getting a good run this morning. About $1.50 running up so far. DWAC is still trying to gear up. It may pull back down though. DWAC, it could pull back down here to 83, which is $1. Breaks over 85 though. We're running to 86, and then over 86 we could run up to 90. AFRM CEO is going on CNBC at 11. Nine minutes away. We'll keep an eye out for it. Right now, it's looking like that sell-off is going to continue. Yeah, I like this DWAC up to about 90. We're gonna have to follow the SPY. She's starting to fall down through that previous day's close. We could start to free fall again. I really feel like this year, it's going to be hard for a lot of people. This is going to be a year you're really going to have to focus on like big picture idea plays. I think momentum is going to be super, super hard to come by this year. The first 30 minutes of the market open is where you're going to see the most volatility for the day. Markets are evolving and changing once again. We got to adapt. There's still plenty of opportunity out here. Lately, we've been seeing a lot of opportunity in stocks that are between about $10, $20 up to $100. And we've been in earnings season. So all these large cap companies have been putting earnings out, stealing that volume and attention away from small caps. Uh, I just got a memory from my Facebook page literally 8 years ago, you guys. I was in Michigan City, Indiana, getting my CDL license. That didn't last long. Or Fort Wayne, Indiana, I'm sorry. Right there. I posted it in the Discord. 8 years ago, I was in Fort Wayne, Indiana, getting my CDL license. I quit like 8 months later and started learning about the stock market. I'd say we're going to run up and test that 85, 86 DWAC. Just a matter of when. And that HTCR, I threw that back up. That didn't hold its gains for nothing. There's just no volume interested in it. Look at how quickly volume dried up. Nobody's interested in it at all. There's more consistent volume right here on DCFC. We got about 1 minute till that CEO on AFRM comes on. Let's pull that up. Things are slowly starting to go back to normal. how it was back in like 2018, 2019. Everybody got burnt out from AMC, GameStop, how just stupidly hot the stock market was the last year and a half, 2 years. Let's look at real quick. Let's go to Google Trends and look. Google Trends, type in day trading. At about 26 the past 12 months. You guys see how the trend of it, day trading, the search term, it's getting drilled down. So more and more people are starting to lose interest in day trading. Now let's look at the last 5 years. Let's do the past 90 days. Been pretty stagnant here. 12 months. So over the last course of the last year, it's been getting drilled down in popularity. Now, once again, let's look at the 5-year. Damn. That should be an eye-opener right there for you guys. Look at that. Look at how drilled down it's gotten. Told you. About the same. It's starting to go back to normal, like 2018, 2019. That craze with the pandemic, AMC, GameStop. You guys remember how hot it was right here, right? Now everybody lost their money. They got a bad experience under their belt. They're thinking the stock market's rigged and there's no chance, or they followed the wrong guru. They lost money. Now they have a bad belief and experience. They think it's all rigged. So everybody just slowly starts to fade out and things are going to start going back to normal. I know personally. The Discord chat room used to be popping back in the day. Last year, we would have about 30 to 40 people just chatting and commenting. Now, there's like maybe a handful of people. That 10%. You see a lot of people come and go in this game. Let's look at AMC. Damn. Over the last 5 years on AMC, it's actually getting drilled down below its normal. It got beat down real hard here, and then it had a super huge spike in it. Then it crashed down, and then it had another spike in it. And then this last little spike here, and it's just getting drilled down. All right, here we go. That CEO is on CNBC. Here we go. Get a quick momentum break here on AFRM. It's got a break out of the wedge. pull back, hold it. Got to break over that wedge. Then you'd be putting your stop down here below 52. It's got room to run to about 57 if it does want to go. Man, Sava. That one's a wicked stock. Up out of nowhere yesterday, just Sava exploded from 50 bucks all the way up to a high of like 62. And then it gave back all of its spike and then went consolidation sideways the rest of the day. And then after hours, it rips right back up to its highs. You could draw a line out though. This is getting super tight. Clean break over 55. You could see it rip up here to about 58. Yeah, I'll show you guys here on Discord what I posted earlier. Right here. This was on my Facebook memories. 8 years ago, I was down in Fort Wayne, Indiana, freezing my ass off in the cold for literally like a month straight. Just standing there, driving a tractor back and forth, getting used to it, to drive it. About 8 months later, I quit, and that's the day I started learning about the stock market and day trading. The rest is history. You never know where life will take you. Always be optimistic, and one of the biggest thing, always just try to be educating yourself, because you never know what you'll stumble upon, and you may find what you're passionate about and you'll just run with it. Some people, you guys, go their whole life without finding what their purpose is or what they're passionate about. So AFRM, if we hold up at this 52, you could definitely rip back up 53, 54, 55. You would just have to take it in $1 intervals. Like I told you members as well, what do I like to do? I like to start with levels and put together a plan, and then watch the stock do as I planned to get a feel for the stock. Am I aligned with it? I would say though, out of all of trucking, what I probably missed the most. I didn't even know you guys were muted in the Discord, my bad. Probably flatbed trucking. That was probably the most fun I had being a truck driver. It's nothing like being a flatbed truck driver because one, you got a good workout every day. I was home every weekend. I was local. I only had to go. I live in Michigan, so I'd go to like Chicago, Indiana, Wisconsin. Those 3 states. Back to Michigan. AFRM's falling through. Give it time. Maybe she'll pop something up later. Pretty much the same thing here with Sava. If she can keep building up, we could see a nice momentum pop in her potentially. That's the thing. We just have to keep jumping around. We see something that has potential, throw it up on our charts that I have right here, and then just keep an eye out for it. AMC's trying to do its thing. It's been getting good pushes. The last 6 trading days, we went from about 15 bucks here all the way up to a high of $21 in 3 days. That's a good $6 run. Then from 21 we pull back down to 18 area. Let me see something here. I'm gonna say about 1975. Yeah, you guys should be able to hear me now in the Discord, right? I had you guys muted. I didn't even realize I did. Thank you. So have you guys been monitoring that stock screener that we created last Friday? the stocks it's been picking up this week. I kept going back to it, and I liked a lot of the stocks that it was picking up and throwing out at me. But what I've noticed with it, it was picking up a lot of stocks that had huge sell-offs, and they had good bounces. That's what I was picking up with that screener. Because of the range that we had on it. So it would have picked up like AFRM because of that big deep sell-off. And then it had a good rebound on it. And it just seemed like every day I would periodically check it, and that's what it was picking up. Stocks that had steep sell-offs, and they had good bounces just because of the range that we put on it. So I think that I want to try to keep tweaking with it. See, let's see what it's picking up today. The number one stock on it. See, look at IAA. See the big sell-off? From 46 down here to 37. So we could keep eyes on this for a good dead cat bounce. If it starts breaking up over 38, 39, we could run up here to about 42-ish. I think we would have to rename this screener as something like death. Oh no, old army guy, last Friday when we were streaming, we streamed last Friday for 4 hours. And during that 4 hours, we were just hanging out and we were creating a stock screener for swing trades, swing trading ideas. So we named it Swing Scan. And if you go up in the Friday chat, you could see I posted the settings for that screener. Yeah, just scroll up in the Friday chat, you'll see it. Yeah, possibly. I think we started creating that screener at around noon, 1 p.m. last Friday. It was late in the day. But like I said, what I've been noticing with it, and I'm going to continue to monitor the characteristics of that screener we created. It's just been picking up a lot of stocks that have deep sell-offs like this. This is the number one stock today on that screener, IAA. And then now, I'll look at the second one. See? Goodyear Tire, GT. From 23 all the way down to 17. But it's how it's sorting it though is by range, trading range, highest to lowest. All right, BKKT fell apart. I'm gonna replace BKKT with IAA, and then AFRM, I'll keep that one up for any bounce, but I'll replace HTCR with GT, Good Tire, or whatever that is, Goodyear Tire or something. Yeah, Goodyear. Maybe we get a nice dead cat bounce on this later on in the day. GT. Let's see why these guys are down so much. This is the daily chart. Okay, they put earnings out. It's a earnings winner, and they beat the estimates. And they also have revenue blowout from the street estimates. They made 5.5 billion. Sales increase. Goodyear Tire beats by 14% on revenue. A Form 8K is a press release. Net sales growth of 38% compared with fourth quarter 2020 was 12% growth, excluding the Cooper Tire transaction. Yeah, I'm not going to go through and read all this shit. This thing's, or look at the weekly chart here. It flushed right through the 50-day on the weekly, all the way down here to the 200-day on the weekly. That 200-day moving average is at 1625. Look at the monthly. The 50 days at 17. Yeah, so let's keep our eyes on GT for any dead cat bounce, along with IAA. IAA is down 20%, just about 870. GT is down 23%, just about $5 a share. Some pretty nasty sell-offs if you ask me. AFRM, GT, IAA, Sava. I think even Twitter had a big sell-off. Yeah. I'm gonna rename this screener we created. I'm gonna rename it Range Scan. And then I want to try something new. I'm gonna duplicate it. Try to do something else. Sort it by relative strength, see what it spits out for us. BTU, energy. Remember when we tried creating a squeeze scan? Damn, BTU. This was up in play yesterday after earnings. Not much volume with these other names here, so that we can move on from this. But this is gold. This had a good breakout and run yesterday when the market crumbled and fell apart. You guys remember? Remember back from our bear playbook that we were talking about? Whenever the indexes start to fall and crumble and sell off, could be a good time to focus your attention on either the inverse ETFs like UVXY, VXX, some of those names, or you could turn over to gold. What, you can actually do that? You can split the Discord into 2 screens and drag it to a second monitor. Never knew you could do that. All right, let's take a look at this range scan we created. Well, even if you pull up your pre-custom scanners here or screeners, Street Smart Edge does have some good screeners. Oversold and gaining momentum, and if you just hover over it, it'll tell you all the settings that it has. And there's only a 15-second delay. So it's a 15-second delay. I can live with that. versus having a real-time scanner. I think having real-time scanners, I mean, it's cool to have real-time scanners like trade ideas and scans, but is it necessary? No. I would say only for like in the morning, if you're trying to catch real quickly what's the stocks that are just ripping up right out of the open, or if you're trying to catch momentum, chase after high of day breakouts. But the possibilities are endless with screeners and scanners. I think the biggest downfall is people try to critique scanners and screeners too much, and they try to have too much criteria, when in reality you just got to keep your scans and screeners simple, bare bones simple. See right here, your 15-day SMA crossing above your 50-day SMA. That may be a good one. You can go in there and tweak that a little bit for your 50-day to cross over your 200-day on the daily chart for squeezes on the daily chart. Let's see if we can do that one real quick. We'll pick 15-day SMA crossing above. I'll actually delete this one. What's it sorting it by? Symbol? Alright, we're gonna have to go in here and redo this. Columns, they're all out of whack. Look at how many different columns they have. We don't need all those. We don't need a dividend payout ratio. We don't need a percentage margin. We don't need long-term PE. We need relative strength. We can have that. We don't need PE. We don't need percentage return on assets. We don't need percentage return on equity. We don't need the RSI. We don't need all these moving averages right here. We don't need the 52-week high, 52-week low. A lot of this we don't need. We'll leave average volume 5-day. We'll keep that. While watching the stream, go to the day channel you are watching for messaging. The stream will minimize to a small box or icon. Hover over the stream menu, and there will be a choice to pop out. This will create a second page you can toggle between and drag to a second monitor. Grab it with the mouse at the top and drag to the second monitor. Okay, I gotcha. We'll put on the exchange. That may be a cool one to have right there. Percentage volume over the 5-day average volume. We'll try that out. We'll put that right with the average volume 5-day. Percentage held by institutions. What sector it's in. Volume. We want the change, the money change, and we want the percentage change. I just want percentage change, not percentage change from the open. So this one right here. Then if you wanted, you can add the trading range. It'll tell you the range from the high to the low. The beta. All right, let's try these out. So we got the way I like to have it organized. I like to have the last trade first. Then I like to have a money change. How much up or down is it on the day, money-wise. And then I like to have the percentage change right after. So number 3. Then from that, I like to have volume. So I can quickly glance over and I can see the symbol, what current price it's at, how much it's up total on the day or down, the percentage change up or down on the day, and then volume. Then from that, that's when we can have, I'll do relative strength, and then the average volume 5-day, percentage volume over 5-day average, what exchange it's on, and then what sector it's in. Beta, trading range, and held by institutions. Click OK. Boom, there we go. Then I can reorganize this a little by just making it tighter. Like this. Just take it, go up to the tab at the top. Just bring it in. Percentage volume over 5-day average volume. I think that this is pretty cool right here. So like it's telling me right now that CSL today, it's at 86% in the average volume over the last 5 days. The higher, the better. Then we can go to the criteria. Show selected. And all we're doing is messing with the criteria that's already preset. Last trade is greater than 25. We can tweak with that a little bit because we like stocks that are above $5. So it's going to look for stocks that are greater than $5. Difference between last trade and 50-day is greater than money value. That's blank. It's got average volume 6 month. We can deselect that. We don't need that. All right, then we got the SMA 15-day. All right, this is where it gets interesting. We don't need the 15-day. We want the 50-day and the 200-day. This is under the technicals. So if we go back, we go into the technicals. Here's the technicals right here. We want the SMA 200-day. So we'll select that one. Show selected. Difference between the 50-day and the SMA 20-day is greater than money value. Difference between the SMA 50-day. So they got 2 of these. We can delete that. Difference between the SMA 200-day and the 50-day. Delete that. Relative strength. Nope, we want percentage change. Change from the open. Percentage change from the open. This is where we're going to have to go in and retweak it. We don't need the 15-day. Just looking for percentage change. There we go. And then just give it a second. Let's see if it picks it up any. Right now it's got 0 matches. 11:45, 45. So it still hasn't picked up anything yet. We just got to keep tweaking with it until we get matches. See, that CEO must be saying all the wrong things. Yeah, for AFRM, that thing went timber. Yeah, she went all the way down. If you were to be looking for any type of bounce on this, see how it formed that wedge? It fell through from that wedge. If this does ever in the future get any upward momentum bounce, your target is gonna be up at where it broke from that wedge. So right at about 52 bucks. There's still opportunity on it. It's all about patiently waiting for your setups. So far, it's had really no upward bounce. So from 83, it's sold off all the way down now to 48. If we bounce up, we'll bounce up here at about 52. And over 52, you'll run into resistance at 54. We have all this overhead now, and then over 54, that's where it could run up here to about 56, 57. You have all these different overheads. That's why a lot of people, they like stocks that are hitting up to new highs, because there's no resistance on the left side of the chart. So when the stock's pushing up all here, there's no resistance over here. It can keep running, and that's why a lot of people love stocks that are hitting 52-week highs, yearly highs, multi-year highs, weekly highs, monthly highs. All right, we got to figure out this scanner. Screener. I don't know why the last trade, it also had like a 200. We don't need that. All we need is last trade is greater than $5. Do we have... We should have shares outstanding on here. See if we can find that. Company performance. There we go. Right there. Shares outstanding. Just by doing that shares outstanding, you can help look for low float stocks. So the shares outstanding has to be less than. Let's do 50 million. Let's do one more. Volume. Volume on the day has to be over at least 100K. See, I want these the 50 day and 200 day to be real tight together. Let's do 0.50. We get any matches from this. Still nothing, so we have to have something wrong. What if I just had one of them? Difference between the SMA 50-day and 200-day. There we go. Now we got it. I had too many. I had too many moving averages. That was the problem. Because we want the 50-day to come up to the 200-day and cross over that 200-day. That's the criteria we're looking for. So the difference between that 50-day and 200-day is between 1 penny and let's do 50 cents is too high. Let's do 25 cents. Probably going to go lower. Last time we had 50 stocks. All right, so we got 50 stocks again. Let's see the criteria for results. So these are all the stocks that are potential for a squeeze on that daily chart. Take a look. NXU. See, this one's getting a good squeeze on it. Up from, that's a good squeeze. 950 up to 1150s the last 2 days. That's the #1 stock on that squeeze. So NXU, this one was a good one, and it's a low float, medium float stock. Look at the criteria. We put the shares outstanding on our moving average screener. It's got to be less than 50 million shares. The shares float on here is at 21 million, 22 million. That's a medium-sized float. Let me rename this. Ooh, look at that one. KPTI. Got a nice squeeze going on here. The daily chart with the 50-day and the 200-day. That's the #1 thing we're looking for with this screener. So we finally tweaked it and we're starting to see results. Now, if we look over at the intraday chart, the last 4 days, it's been squeezing up from 750s up to 10. TTMI. This one had a big gap down. There's another good squeeze. But this is oil. I wonder if we can add in a criteria that is percentage short. Show selected. So we'll be looking for percentage short. And I want institution. Percent institution. Right there. There's percent held by institutions. So we found that one. So now if we can find percent short or anything short, we can then create it into not only just a moving average squeeze, but also a short squeeze combined. So let's see if we can find anything with the short flow or short shares outstanding, anything in that. Nothing in the technicals. Nothing in the metrics. Price performance. Probably not going to be in here. Not seeing it. They don't have anything that's short, which kind of sucks. It's all right. We still got a good little 50-day and 200-day squeeze scanner here. Have it sorted by percentage change on the day to see which ones are up and moving. And now we'll just keep this one on tabs the next few days, see the results it spits out, see how satisfied we are with it. The whole goal and objective of this screener is to pick up on squeezes before they happen. So we could pull up something like KPTI, for example. Let's pretend it's a stock. And you see here on the daily chart, it's having a good squeeze, getting real tight with the moving averages. So then next thing I would do is I'd go over to FinViz or something. All of this stuff is free. KPTI, type that in. And then I'd look at the float. I'd make sure it's a low float stock. Make sure it's a low float. It's not. And then the next thing I would want to see is the short float. You could see if that's high. And from that, you can keep your eye out. If everything aligns, low float, it's a high short float percentage, or even if it's just a low float, you want to keep it on watch for a daily chart squeeze. That's a good one. Then we'll go back to our range scan here. We had this sorted by I believe it was trading range. Yeah, this one's sorted by trading range. Delete that. We'll look for stocks up to about, let's do $80. We'll delete that. Volume. Volume has to be greater than 100,000. And then the percentage change has to be greater than at least 3%. We'll do the shares outstanding again too. We'll do 100 million. Sort it by percentage change. Let's see what we got. CRS, the #1 stock on it. Last 2 days running from 30 up to 40. 47 million float. Pull up the day or intraday. Got a good move going on today. Trending nicely. See what else we got. RELI. Good move today. Man, look at that. That's a good one. Good setup. If it gets up and going over $6, this one could continue to push. And it's a low float. 6.2 million. I only know that because we've seen RELI pop up in the past. This is where it pays to be here every day. You remember these tickers. And then we got NXU. This is #3. So I'm liking this list of stocks it's picking up today. I like this one. We'll rename this one. I like this one. I'll name it Hot Stocks today. We're picking up PTEN. This is having a good breakout today. CGC's having a good break. $8.50's up to $9.50, $10. So yeah, this screener is pretty sweet. I like this one. Hot stocks today. Go to criteria. I'll let you guys take a snapshot of that if you want. And then I'll share this with you guys. Oh, we got to change one thing on it. I have it percentage change from 5-day average close. I didn't see that. Let me save this one real quick, and then we'll change that, and we'll see if it makes any difference. I do like the stocks that's picking up, though. Up here in the Friday chat, capture, open. I'll post that one. That's the criteria settings for hot stocks today. And then we'll change this to just percentage change. Yeah, it completely changed it all up. But as you guys remember, you guys, at the bottom of that screener, make sure you do the results sorted by percentage change, 5-day average close. All right. Now let's see what this one's popping off. YMAB is the number one. It's a good $2 move from the open. COOP. That's a powerful move on the daily. Damn, look at that. This fucking stock ran up like $6, $7 a share. Z, this one's running up too. Wow. Yeah, I'm liking this one too, guys. This one's awesome. Oh yeah, look at that. ZG. Nice bottom this morning at 53, running up almost $4 a share. All right, so we're going to duplicate this. We're going to duplicate that. And I'm going to have one doing with the percentage change on the day. And then the other one is with that other bottom filtering. I like the results of that one too. Rename this one. Hot stocks today too. Go back to criteria. And this one's going to be sorted by percentage change from 5-day average close. Right there. Then we created another. All right. Did you guys get all the criteria and all of everything that I did for these settings for the screeners? Even the 50-day one. And then we can go. Yup, I will. In the Discord, I should still have it. We scroll down to stock screener, Street Smart Edge right here. Click on that one. And then just in here, I have, man, I got a lot for you guys. 1, 2, 3, 4, 5, 6, 7, 8, 9. But I didn't like this one last time, so I'm going to delete that one. That's a 10 SMA and a 50-day squeeze. I'll delete that one too. All right, so we got so a 50 SMA and a 200 SMA daily chart squeeze screener. Upload file right here. Boom. Then we got capture one. Go to the second one here. Then we need this one. Yeah, this one. For you guys watching on YouTube, I'm going to be posting this stuff in the Discord. Hot stocks today. 2 screener. Make sure to look at bottom of pick for sorting results. And then before I forget, we did our range. You can easily overlook that. Just the bottom of the sorting. I forgot about that in the past. Just click on that link, VW, and it'll take you right there. Man, there's a lot of these new screeners. New screeners we created. These are all the stocks they picked up for opportunity today. ZG. YMAB. Coop. And this is a good list of stocks, I think. A lot of good stocks, good setups. Look at Z. These are stocks a lot of people ain't even talking about. And for the most part, we kept our scans pretty bare bones simple, I would say. I mean, all we really did was throw on a moving average and range, and we didn't put in too much criteria. Oh, not age. Well, I gotta filter that percentage change. CRS. Yep, we'll throw that one in. NXU. That was a good one. RELI. TTEN. That's a nice $2 move. BTU. KPTI. That's a nice $1 move. I think we can tweak with the moving average. The 50 and the 200 days squeeze a little bit. I don't think it's quite there, but all of these stocks with the screeners that we've created today, all of these stocks it picked up. New screeners we created. These are all the stocks they picked up for opportunity today. 1, 2, 3, 4, 5, 6, 7, 8 stocks. And then just a little bit earlier, I believe I pointed out Yup, all the hot stocks right here this morning. So that's a total of 16 different stocks that all offer different opportunity. It's pretty good. Good if you ask me. What are some what's a scan? Throw an idea out at me, you guys. What's a good scan you feel like? Let's see if we can create one. Any idea? Just throw it out there. I wish Street Smart Edge did like Fibonacci or like a VWAP or something. Like a VWAP crossover. Dead cat bounce. That's kind of what we were remember our swing scan we were just talking about first? How I said what I was noticing, it was picking up a lot of stocks that had huge sell-offs. It's kind of like what it kind of is a dead cat bounce screener, which I named the range scan. Because look at the number one stock it's picking up today is IAA, and look at that big sell-off. So right now it's just a matter of throwing it up and keeping an eye on it for when it does do that dead cat bounce, or if it does it. And then number two, look at Goodyear Tire. Those are the top two stocks it picked up today. So these are definitely dead cat bounce potential. It's kind of hard to create a screener that is picking up when a dead cat bounce is currently happening right now. You know what I'm saying? Like, this is as good as it gets is right now when these stocks have deep sell-offs like this. The best we can do, keep eyes on them and then wait for them to confirm that they're starting to break up and go. We'll see what happens with them. I believe I posted that one. Yeah, that's if you go into the stock screener, that's the range scan. The dead cat bounce one. Extremely oversold stocks on the daily. Or maybe on the weekly. Extremely oversold. So we would go into I got a lot of them here. I'm gonna delete this one because I never use it. All right, let's see what we got. So you want extremely oversold stocks on the daily or the weekly? Strong stocks with 20% retracement. Climax sell-off. Downtrend and currently overbought, oversold and gaining momentum. Percentage change from 6-day close is greater than 0. You can create an options one. Top options volume is what I would do. It would let you know where all the option money is. Yeah, I wouldn't do top call, top put. I would just do top volume and options. I'm trying to think with that extremely oversold stocks on the daily. It's kind of hard to do that because I'm thinking like you would want like an RSI, like, but there are a lot of stocks. There's a lot of garbage ass stocks out there. But I get what you're saying though. You want something that recently had a huge sell off. Could have been a day ago, a few days ago. And it's like flatlining for that potential upward bounce. That's kind of like our range scan that we created. I can try though. I'll do a climax sell-off. Let's see what the criteria is for that one. All right, climax sell-off. Let's see the criteria. Show selected. Looks like we got the last trade is greater than 5. Low. Difference between low and low 20-day is less than blank. Held by institutions. Percentage held by institutions is greater than 40. All right, that's a good one. Average volume 6 month. We don't need that. That's garbage. Relative strength is less than 20. Okay. That's kind of, I would say greater than 2. Let's do that. SMA 15-day. Now this is just personal preference. Let's see the moving averages they have. They got the EMA. SMA 10. See, I'd want a short one, like a 10, but if I could create a custom one, I would do like a 13. But a 15-day will do, I guess. We're going to want volume on the day. I don't want any stocks that are spotty. Let's find volume right there. We want volume to be greater than, I like to just go off of most of the time 100K. It gets rid of the stocks that don't have practically any volume at all on the day with like 5,000 volume. I mean, we don't care about those. So let's go back to show selected criteria. And let's just see for right now what this is spitting out. Once again, all of the columns are fucked up. Yeah, see, a lot of these are just garbage. They're just getting beat down and drilled down. We don't want that, but we're on to something. Nothing we can't fix. See, recently, like the CC from 36, it's got drilled down $6. It's down 15%. It's trying to find a bottom. So with this one, yeah, if it breaks up over 32, 33, run right back up to here. We're on to something. Let's see if we can keep messing around with it. The criteria. All right, we want the low. Let's do 5-day. Let's do a cross, a death cross with what moving averages you want to do. A 10-day and a 50-day. It's going to be a short term sell off. Ah, there you go. That's a smart move, old army guy. I didn't even think of that. What we're doing, you guys, by sitting here and creating these screeners, we're putting in the work for the future here to develop and create new ideas. So when things do turn bad in the markets, we can quickly turn over to these screeners that we've already pre-built and put the work in for any new ideas to come. So these are idea generators. That's what they are. And by having a good variety and custom screeners that you've put time and effort and work into, this is where you're going to get paid. And then you got other people out there freaking out, I don't know what to trade. Like, dude, you got to put the work in. And this is where, too, if you have a passion for this, to me, this isn't work. I mean, I enjoy doing this. I love doing this. And we're like a scientist. We're testing, we're refining it, testing it, refining until we find that medium where it fits for us. And it's just about little tweaks here and there. So right now we're trying to find that groove of ideas that spit out that catch our interest. So we're experimenting and testing right now. So let's do an SMA 10-day is less than well, I don't know if I want to do less than. We want stocks that already had a sell-off recently for a rebound. SMA 50-day. Let's try that out. It's all about biomechanical efficiency. I don't know what biomechanical, biomechanical. I don't know what that word is. This old army guy calls it being lazy. Work smarter, not harder, I always say. Breaking our back every day. Never ends well. Alright, I gotta fix this. Yeah, I should have listened to you, our old army guy, and just deleted all of these. Or duplicated a already pre-built screener. But all I'm gonna add are just the basics. I'm not gonna go crazy with this. Alright, of course we want the exchange, volume, drone sector. We want the change, percentage change. That's right, they don't have shares outstanding. Yeah, they do, right there. Shares outstanding. You can get a quick glance at potentially how big that float is. Boom, there we go. We'll sort this by percentage change, because we're looking for that bounce. Let's see what we got. These really ain't up that much, so we need see, this one had a recent big sell-off, TWOU. So this is what you'd be really wanting to, I think, look out for, right, Rome? Same, pretty much the same thing old army guy was asking. Dead cat bounce. So stocks that recently had a big sell-off within the last week or couple days, and then they're starting to level out for that upside potential bounce up. We're getting there. Just a fancy way of saying doing the same job with the least amount of physical effort. Yep, that's where it pays too. How many monitors do you have? And you have everything set up. Like how I have 5 monitors, and then I have right above my head, I have a huge, like 40-inch TV. And on that big, huge TV, this is where I have this up. So I can quickly glance up and I can see where the S&P 500 index is on the 10-minute. I got my daily chart for the stock, the news, my fundamental card, my screeners and watch list. Everything's easily accessible. I can just, a click of a button, switch over to something. Criteria. All right, that's what we got to focus on. We got to focus on this one right there. Difference between low and low 5-day. We want it to be greater, not less than. So greater than, let's do $1. That's where we're going to get our upward momentum. Yup, exactly. Old army guy. Oh, and then I totally overlooked this too. Look at way down at the bottom. I told you, man, we can easily overlook this little thing here. It's resulting, doing the results sorted by percentage volume over 6 months. That's too big. We don't need that. So we're going to change this to, we really don't care too much about the volume, average volume. We want like a percentage change. Let's see what we got. The money flow. Try it out. Let's see what it's got. This is all screwed up. There we go. Let's see what we got. Zillow is the top stock. Not bad. It's not bad. Today having a morning dip, selling down to 53. Then since that 53, it's had a good run up to about 58 bucks. So that's a nice $5 per share run. That's not bad for the first stock. VIMEO, Venmo. There's another big sell-off recently. Right there. Down to 9.25. Now we're having a nice rebound up today to 13 bucks. So that's a $3 run. So far so good on this climax sell-off for us, Rome. Open. This is the third one. Not really the criteria we were looking for. Damn. Yeah, this stock had a huge run. Look at that. The $14 run the last 4 days. Sideways action there, just above 80. Thing just goes on a nice trend. At that euphoric explosion. More of an options type play. Oh, look at this one. This one, I had this one on watch a long time ago. Man, what was I doing here? Guess I was watching this back in August or something. We're getting somewhere. Rename. Call this the 5-day climax sell-off. We're getting there. Difference between the low and the low of the 5 days greater than $1. That's to get us. We're bouncing up from that low. We're not continuing to push down any lower. Percentage held by institutions is greater than 40. I don't necessarily know if we need that setting. I'm gonna take it off. Relative strength is greater than 2. Then we got the SMA 10-day is less than the SMA 50-day. With it, if I could go lower, I would. But the 10-day is the lowest it has. We also have a momentum. After we remove the institutional percentage, let's see what the results we got now. TLRY got put up in there. So Z. MU. TLRY. See, the big thing it's scanning for, what it's totally measuring off of. This is day 5, day 4, day 3, day 2, day 1. That one we were just doing. It's measuring from the low of 5 days ago, which was right here at $6. The next 5 days, it has to be greater than $1. And that's why it's picking up on this screener here. It's already been uptrending. So now we got to figure out what we need next. It's like I need like a momentum. I need a momentum tool. Let's see if we can price performance. We'll add another filter. Let's see if price performance. Gonna be nothing under price performance. We need a technical. That's what we need. So what do you guys want to try out? Do you guys want to try out a momentum, MACD, Bollinger Band? We could try a money flow. Some of these I've seen them before, but I don't know what they are. So let's break out our handy friend Encyclopedia. All right, money flow. What is money flow? Money flow is calculated by averaging the high, low, and closing prices and multiplying by the daily volume, comparing that result with the number for the previous days. Previous day tells traders whether money flow was positive or negative for the current day. Positive money flow indicates that prices are likely to move higher. while negative money flow suggests prices are about to fall. The below example shows negative money flow between day 1 and day 2. Let's try it out. Oh, I already have it sorted by money flow. We'll do that. COOP. Nice explosion today. We've had Z, ZG, BE, Yelp. Wow, that's a nice move. Yelp's gearing up, trying to break out of that trend. It'll push back up and test the high of day. I don't want money flow. Williams percentage R, also known as the Williams percent range, is a type of momentum indicator that moves between 0 and negative 100 and measures overbought and oversold levels. The Williams percentage R may be used to find entry and exit points in the market. Indicator is very similar to the stochastics oscillator and is used in the same way. It was developed by Larry Williams, and it compares a stock's closing price to the high-low range over a specific period, typically 14 days or periods. Huh. That's, I don't like that. Why can't they have a momentum from a 5-day? I don't know what a percentage K is. The K ratio is a valuation of metric that examines the consistency of an equity's return over time. The data for the ratio is derived from a value-added monthly index VAMI, which uses linear regression to track the progress of a 1,000 initial investment in the security being analyzed. I mean, that's good for like long-term investing. See the results. So far, again, Coop, Z, ZG. Picking up a lot of the same. We're gonna have to come back to this one, I think. We're almost there on it. We just gotta figure out a couple things. We need that momentum. Find out what a few of these are. I have no idea what the heck D percentage is. Right here. Can any of you guys, do any of you guys know what the heck that is? I have no idea. I've seen them all the time, just never cared to look into them. The DI plus positive 14 day. I don't know what that is. Let me see here. DI plus positive 14 day. Positive directional indicator. I bring it to the side because when I'm doing a Google search, I don't want nothing inappropriate to pop up. I have no idea when I'm typing in plus DI what's going to pop up. The positive directional indicator is a component of the average directional index and is used to measure the presence of an uptrend. When the plus DI is sloping upward, it is a signal that the uptrend is getting stronger. The indicator is nearly always plotted along with the negative directional indicator DI. Designs by Wellis Wilder for commodity charts on the daily frame. It can be used for other markets or time frames as well. See, a lot of these guys back in like the mid 1900s, like 1940s, 1950s, they were coming out with a lot of theories. You see a lot of those old books like the Dow theory, Elliott wave, all those guys, they were coming out with their own theories of why stocks move and coming up with statistics and these indicators and stuff to track. Let me Google something real quick. Yeah, I made a Dow theory video way back in the day. Right here. 2 years ago. Who is Charles Dow? The pioneers of technical analysis. Back when I first started making YouTube videos, I was really getting into diving into the history of the stock market. I'll share this with you guys if you guys want to watch it. I did all sorts of history videos. Ah, there you go, Irish. Yeah, I never pay attention really to the NASDAQ. So, yeah, I learned that too. So, the VXN tracks the NASDAQ 100. Yeah, I've always just followed the SPY. the S&P 500. Good to know. And then this is the flash crash back in May 2010 of the Dow Jones. This was back when you could do on demand on Thinkorswim. But by simply diving into like the Dow theory, you could scroll down and they'll have like recommendations of other ones. The ABC of stock speculation. The stock market barometer. Yeah, I like diving into this stuff and checking it out. One of the most reliable stock market predictors is Dow's theory, developed by Charles H. Dow, the founder of the Wall Street Journal. That theory, which makes sense of the fluctuations of the Dow Jones Industrial Average, is clearly and simply explained in the Stock Market Barometer by W.P. Hamilton. As Hamilton wrote, the Dow Jones average is still standard, although it's been extensively imitated. There have been various ways of reading it, but nothing has stood the test which has been applied to Dow's theory. Besides providing the valuable explanation for anyone wishing to understand the rise and fall of stocks, Hamilton analyzes the history of the stock market since 1897. William Peter Hamilton was the editor of the Wall Street Journal and also wrote Barron's. He worked closely with Charles H. Dow, founder of the journal, the Dow Industrial Average, and the Dow Jones Financial News Service. Huh. I wonder if this book is in that PDF I shared with you guys. Let me look real quick. Let me know, were you guys able to download that Mega app and take a look at all of those books with the link I shared for you guys in the book recommendations in the Discord? Yeah, I think I found it a year ago also. What are you talking about? What's this called? BARO? Neater. No, this book, it's not I'm gonna add this to my list though. I gotta sign in real quick. Oh, there you go. Thanks for doing that, Irish. I didn't know you could do that. I never downloaded it on my desktop. That's actually a good idea. I'm gonna do that. You guys do that as well. I'm just gonna... It's 1.6 gigabytes. So... yeah. Good idea. Download these books onto my desktop. That way I don't lose them. That's a lot of books at our disposal, man. Yeah, there's gotta be over... well over probably 150 books. How long did it take for you to download, man? It's downloading right now. You can hear my fan in the background going off. It didn't create any folder yet, so let's see. There we go. I got it now. Right here. This is a shitload of books, man. Holy crap. That's various trading technique books. Then this is stocks. Economics related. Day swing trading. There it is, right there. Day trading strategies, indicators, easy trading strategies using indicators that make money. Range trading strategy. Yeah, you can learn a lot of shit from all of this stuff, man. Let's look at trading, range trading strategy number 1. Come on, will you take me to it? Looks like he's using trading view. Best moving average periods. The 377 EMA, 200, 50, 89. See, I use a 55 EMA. But the 377 EMA, I use a 333, 355 EMA. Two to three to trade with at a time. His favorite combination is using a 21 EMA, a 50, and a 200 EMA. Those are good EMAs there for swing trading. We pull back up the Discord to see if you guys are saying anything. Oh yeah, Irish. Shitload of nuggets in here, dude. A shitload of nuggets. As I tell a lot of people and you guys, I have all the tools you need in this Discord server. It's all at your disposal. You just gotta put the work in. Well, as a trader in the stock market, you're always learning and always learning. Always. I want to look for that trading range one. See what his take is on that. Let's see what he says here with this. Moving average risk management strategy. We can use moving averages as a useful way to managing risk. Some moving averages that, when broken, may indicate a trend is reversing or a large drop is imminent. I usually use moving averages in my trades as warnings to get out if they are broken. My favorite moving average for managing risk is the 10 simple moving average. If the 10 SMA breaks, then I use this as a red flag that the trend may be ending soon. It is important to note that I wait until I see a full candle open and close before this moving average, before I consider it a red flag. Below is an example of how I would use the 10 SMA for risk management. Like right there. So he would wait for the candle to open and then close to confirm his red flag, not as soon as it drops down below it. There we go. Chapter 4, range trading strategies using indicators. This is when we go into like range bound markets, I like range bound markets. It's a lot of opportunity. Not a time to be looking for breakouts. All you're doing is playing just basic back and forth range. Sideways ranging markets are known to be very frustrating for most traders. These are the hardest markets to trade and where most traders lose money. People lose money in sideways markets because most strategies are designed for trending markets. When you use an indicator designed for a trending market and it gives you a signal in a sideways market, it will most likely be wrong. The first step to avoid losing money in range markets is to determine if your market is ranging or trending. There are a few ways you can do this. Using moving average for finding sideways markets. Add 3 simple moving averages on your chart: a 30, 50, 100. If they look messy and tangled up, then you are most likely in a sideways trading range. See figure 5.3. If you were in a trending market, they would all be pointing in the same direction, with the lower period moving average above the high for uptrends and opposed for downtrends. Using a Adx indicator for determine if market is ranging. The Adx indicator is normally used to determine if the market is trending or non-trending. If the market is trending, then it will give you a higher reading. And if non-trending, then it will be lower. If the ADX is below 30, then it is a sign that the market is ranging and moving sideways. Note the black line is a 30 reading on the ADX. This line right there, that's a 30. So if it's below it on that ADX, you're in a range bound market. There's a lot of range on that chart. I personally love range bound markets. I do. But I'm the type of trader, I don't really go after like weekly high breakouts. I'll go after daily high breakouts, but it's got to be like early in the day to break that high. But most of the time, I'm trading reversals, bounces, ranges. For me, that's just my style and the type of trading that I like. Once we know that our market is not trending, we can use range trading strategies to and avoid using trend trading strategies. Range trading strategy number 1. Kettler channel and stochastic strategy. Directions. For this strategy, we will add Kettler channels and stochastics on our chart. To add the KC in TradingView, simply type Kettler channel in the indicator search box and it will show up. Once you added your Kettler channels, go to the settings and change the multiplier to 3. All right, let's try it out. Let's pull up a stock. What stock has been a good one today? Go to my main screener. All right, YMAB. I've told a lot of you guys that using Kepler channels, it's a good way to help you in understanding how to read charts and how stocks like to go up and down. I like to delete that middle line. I don't like that line. Change the multiplier to 3. I don't have a multiplier. I'll change the ATR factor to 3. Length is 20. Okay. Then add your stochastic and change its smooth setting to 6. I don't know if Street Smart Edge has stochastics. They got a stochastic RSI. And they got an oscillator. Yeah, there is no smooth. Nope, can't use it because Street Smart Edge does not have stochastics. But by using that, you're gonna overlook some stuff. That's what I don't like. All right, let's see what you, once again, now you're using 3 indicators. Man. So this guy, he's using pivot points, stochastics, and parabolic SAR. That's 3 indicators. That's a bit too much for me, man. Once you add your pivot points to the chart, change the setting on your pivot points, changing the time frame from auto to weekly. I don't think pivot points. Yeah, they don't have that option for pivot points. Hmm. Yeah, I don't really care for this strategy. Too many indicators. Let's see what else we got. Oh yeah, the SPY is free falling. Look at that. Oh, they even got Mike Bellafore's The Playbook. Encyclopedia of Chart Patterns. Tim Ord's The Secret Science of Price and Volume. Tim Dorsey's Trading Tips, a playbook for stock market. Let's check that out. Oh, wow. Yeah, you're right with that. It's education. That's all that matters. Man, you got a shitload of stuff, man. Holy crap. Ooh, what's that one? Fibs Don't Lie, Day Trading Course 2018. That by the Fib Queen? Damn, look at you, Rome. Just sold the call option on SPXS that I bought on Wednesday. Sold up 250% home run trade. Hell yeah, dude. Fucking awesome. I didn't know True Trading Group had a course out there. It's not the greatest, I heard. Oh, I see what you're doing, I think. So, I'm not mentioning your name, but what you're doing is you're taking from YouTube, the internet, Mega, anything you find, and on your personal desktop, you've created folders of all of these different gurus and topics, and you're adding them to those folders, right? But there are some folders that are jumping out at me, man. Like I'm looking at the Fibonacci, Fibs Don't Lie Advanced. Indicator Vault. I don't know what that is. Yeah, when Roland Wolf dropped his trading DVD, I really wanted to get that DVD, and I'm glad I didn't because it is kind of basic, bare bones, and all he gave you was the reverse split low float strategy. Yeah, you got a lot of stuff, dude. A lot of stuff, man. And what I would do if I was you, man, share that with your kids, dude. Get them involved in that stuff. A lot of trading psychology. You know, I've always been wanting to get involved. I want to learn more on. I've always been interested in the pivot points. Here, I'll put it on my 10-minute. Your pivot points. I'll make all of these this color. Like so. Yeah, that's a lot of great stuff, man. Yeah, it's just chipping away, just a little bit at a time, man. And the more education you cram into that brain, and you just accumulate all the education, man, the more you know. I mean, look at when you guys show up every day. I repeat myself a lot, but you guys do still learn a lot every week from me. I study my ass off every day, every week. Still to this day, I'm learning. It's a never ending process. You evolve, you get your beliefs change over time, your character changes, your strategies change, you adapt with the markets. And what's also is good about running a community here, for those that stay and hang around, I won't say linger around, but those who stay, like a few of you guys that have been here for a year or more, 2 years, we all see the markets differently. And when you guys say stuff, sometimes I even look at that and I reflect on stuff, and it makes my brain start to turn. And then I start to come up with different strategies or ideas, and it's a great thing, man. Yeah, you're on the same course that I took, man. I just kept it investing in my education, and now, dude, it's paying off for you. Just like when I shared all here with you guys right here, all of these different trading DVDs. I have over 14 trading DVDs all in here. Tim Sykes, Investors Live, Trading Tickers. I paid a lot of money for those DVDs. I didn't rip them from the internet for free, but I just kept investing in my education. I couldn't get enough of it. And as I was saying with somebody in the chat here, um, I still got to do it, but I have like probably 5 DVDs that I gotta upload still, that I went out and bought, and all they are just like investor summits from early 2000, like trading, swing trading strategies, and reading level 2. I still have to upload those. I'll try to do that this weekend for you guys. I'll try to upload them this weekend. I think I'll just break down, and I have to pay for I'll have to pay for this. I think it's Mega Pack. Yeah, I would have to buy this. the lifetime license. Right? So I would buy this for 60 bucks. And then I'll be able to burn those DVDs and upload them for you guys. Oh yeah, that's why it's not going. It won't let me fucking close it. Let me get out of here. Fuck. Huh. Yeah, was experimenting. Other than buying a spy, put buying a call on the 3 times inverse EF. Damn, look at you, Rome. Dude, you out here, dude. You out here getting it, my dude. What? You bought Tim Gertani's trading tickers too? Was he still trading OTC penny stocks? That's what he, yeah. That's what turned me off with trading tickers. They were all OTC pink sheet stocks. It's like, dude, I don't trade that shit. But I would say I still took away of some valuable lessons from Tim Gertani. Roland Wolf, not so much. I've never been a fan of Roland Wolf. He's kind of always rubbed me the wrong way. Like he really holds back a lot. Yeah, looking for 5 penny move with 250,000 shares. Yeah, that's extreme stuff there. That's stressful. I don't want to be having trading like that. All right, let me go back to this. I'll open that link later on. Thank you for sending that over to me. Yeah, you got a shitload of stuff in there. I'm gonna have to go through that, see if there's anything that perks my interest. I still haven't went through this PDF book thing here. That's why I'm doing it right now. There's a lot of books in that thing, man. A lot of books. That's just insane. Yeah, that's a lot of books. Oh, Frank would like that one. The Secret World of Oil. The big ripoff. The Rothschilds Dynasty. Man, yeah, these are a lot of fucking books, man. Dan K. Tharp, Super Trader. The Peter Lynch Playbook. Yeah, don't forget, you guys, if you're a part of the Trading Learning 101 Discord, to get access to all of these PDF books, they're right here in the book recommendations section under education. There's well over probably 250 books in that, and this is just one of them right here. Short-term trading techniques, chapter 6. Tactics for short-term trader. Bull make money, bear make money, but pigs make nothing. Long tails of down, a trading technique. High short interest, the selling climax, spin-offs, when the high-low reverse up from below 10%. Strategy for option expiration. You may like that one right there, Irish. Guideline for selling short. Yeah, and Rome. Make sure you check out these books too, man. I'm sure you'll find some good stuff in here. Understanding option strategies. There you go. $131. Have you ever noticed that the difference in a football game's outcome can often come down to the great special team play or Hail Mary pass? Hail Mary pass. The following tips deal with how you can capitalize on special situations in the marketplace. For instance, have you ever taken advantage of an option expiration volatility? What about playing a spin-off? Have you ever considered shorting a stock? Using these strategies, your playbook can make you a more well-rounded player and give you a competitive edge. That's something that I would say. Tactics for the short-term trader. Becoming an expert short-term trader takes a great deal of work, experience, know-how, and money. It is difficult and can be dangerous. However, you can make a good profit by adhering to a strict risk versus reward strategy, and these tips should help. The nature of the risk in short-term trading is not understood by very many people. As a trader, you really are not risking your entire investment on a particular transaction, as the odds are high and that you will be out of the stock as soon as it looks even remotely weak. The real risk lies in the fact that while a short-term trader cuts his losses, he also cuts his profits. To be successful at this sort of thing, you'll have to pick stocks that are going up and going up now. Otherwise, you are going to spend half your fortune and most of your time chasing your tail. Here are some helpful hints. 1. Consider buying after a stock has pulled back. This will give you a better risk versus reward ratio and a tighter stop loss. You need every edge in this endeavor. 2. To sell immediately if the stock turns sour. Sell if it drops below its support line. The idea is to not let it head south like a migrating bird. Violation of the support line or a strong area of support is a strong warning to exit the position. 3. Have in mind a fairly precise short-term target. The vertical count used in point and figure would be very effective. And the stock moves up, move the stop loss up below it until you are finally stopped out. An alternative to the above procedures would be to construct a trend line as soon as possible. If this is violated, sell the stock. There is always one main trend line. However, the short-term trader may want to redraw shorter trend lines. Trend lines can prove useful to the short-term trader in another way. A stock in an uptrend may be purchased as it hits the bottom of the trend line. If the stock does not rally off the trend line and continues its decline, then you have a close stop loss. Bulls make money, bears make money, but pigs get nothing. Make nothing. I like that saying. We'll try to read this. This is back when they were using right here, look at fractions. Remember back in the day they would use fractions? They'd say like the S&P 500 is up 3/4 of a point today. That's when they changed it, like early 2000s. So yeah, that just goes to show how old this book is. Yeah, pigs get slaughtered. I like that one too. First time I heard this expression was while I was working at a bond desk. I had asked a trader for an offering on a large amount of an agency issue. After relaying the officer to the customer, the trader inquired about the status of the trade. I told the trader the customer had passed on his offer because he was looking for a better price. The trader's response was uncharacteristically tame. He simply said, well, bulls make money and bears make money, but pigs make nothing. I was prepared to hear an earful about how absurd the customer was. Traders can be that way, which is probably why this low-key philosophy stuck in my head. This brings to mind a couple of thoughts about buying stock. The first is that if you really like a stock and have done the necessary work to support your conclusion, then don't let 1/8 of a point keep you out of the trade. You often investors will put an order in just under the offer, hoping to get a better price, and wind up missing the trade because the stock did not drop to that extra 1/8 or worse. It really is a stock that want to own. I'm having a hard time reading this because I'm squinting. And they end up buying it at a higher price. Unless you are day trading the issue, if 1/8 or 1/4 is going to make a difference, then maybe you ought to reevaluate the risk reward parameters of the trade. The second thought is when to take profits. Consider taking partial profits, or money managers reduce a position by 1/3 when they are up 30% and take another third off when they are up 50%. This strategy allows to take some money off the table. It accommodates reducing risk while allowing the position to run. In addition, reducing the position as it grows helps to keep in mind with the saying, you guys, when I tell you guys and preach to you guys, don't be picky as fuck about where you enter in. There's a lot of people out there that are taught to do not market order in. What you want to do is put limit orders, and that's fine. You can put limit orders in, but if you think the stock is ultimately going higher and you could see it running up $1, $2, $3, see, I like to have that mindset. I want to think more big picture. I don't want to get fractioned out by pennies. I'm not here to trade pennies. I'm here to trade dollars. So I want to have that mindset. I'm not going to be picky about a price. So $7 to me, it could be $7.10, $7.15, $6.90. I'm just more focused on the area. If I think the stock can run up $1, $1.50, I'm not going to stress myself out over 10, 15 cents. That makes sense? And that's why you should take it in levels as I teach you guys. Focus on areas of interest. So like $8, getting in at around that area, my stop loss would be down below. It's like $7.75. I'm focused on the areas. So $8, that could be $7.90, $8.10, $8.15. I'm focused on the area. If I think it can go up to $9 a share or $10, that's a potential upwards of $2 a share, $1.50, $1. Like I said, I'm not going to stress myself out over 10 cents. It's not worth it. If I think it's going up and I got a feel for it, I'll jump in. A lot of people are taught, don't market order in. I mean, I market order in all the damn time. All the time. The only time I really ever got screwed over on market ordering in are on stocks that practically have no volume at all. And there's a wide spread between the bid and the ask. So it's a lot of deep understanding of the game as well. That's where new people, they just don't have the experience and they just don't know any better. What if I just want to hit erase? Just get rid of all that. Yep, always lock in your profits too. Lock in 30%, 25%, then lock in quarters. Remember, if you're under PDT rule, you can buy once and then you can sell 100 times if you wanted. As long as you don't buy twice. Don't sell 2 times because they'll count that as 2-day trades. So everybody's going to be in their own unique situation. Remember that. Some of us are over PDT. Some of us are under PDT. Some of us have money that we really shouldn't even be trading with or investing with. I gotta make that rent money by Friday. You're a fucking idiot, dude. I'll check this book out later on. There might be a few things in this book I can take away. This guy's talking about 1999. Qualcomm, QCOM. Let's see if QCOM is still around. I think it is. Qualcomm. Look at this monthly chart. Let's see if we can go back. So the farthest we can go back is 2003. It was right here at like $13. Now it's up to like $200 a share. It's a pretty good stock though. Looking at the weekly chart here on Qualcomm. Nice uptrend. Uptrend here. Then it goes into just a sideways consolidation, resting. Then you got once again another nice up move, and then you get a retracement, more consolidation, and then from there we went on that epic bull run from about 2018, 2019 for the next 3 years, 2 years. We went on a beautiful bull run in the market. Why a lot of people are saying we'll retrace down and go to a bear market. So look at that. From right here to when it bottomed right there. That was over the course of July 2014 to February 2016. So about a year and a half. Yeah, about a year and a half. Qualcomm trended down and was in a bear market here. Then it had a nice up run right here. Range bound. And then the big up move. So over the course of that, what's that, 7 years? Seven years of accumulating all here, thinking long term, accumulating, and it's still accumulating as prices continue to push up over time, you'd be making bank. AMR. I don't know if that's around still. Yeah. Alpha metallurgical resistance resources. Energy. The mining company in West Virginia. Wow. That's a beautiful daily chart. Stock open, did nothing, and then peered off to just garbage. And then that is an epic run. In 1 year, it ran up 100 points. Talk about a turnaround, huh? That's going back to that passage we read in that guy's book on your bigger time frames with your moving averages. You want them all to be upward trending. Your moving averages. Notice how they're all tangled up right here. That's sideways action market. So that could be a tip that you guys can take away from today's lessons. Looking at your bigger time frames and your moving averages, are they tangled up like this, or are they trending upwards like this? Big picture, big minded head ideas. That's what I really want to work on this year, is my big picture plays for my swing trading and long-term investing like that. And all of that is it's gonna fall into your day trading, momentum trading. Yeah, this book too, it's got a lot of good options in it, so that's worth checking out. How rich people think. Guide to hedge funds. What they are and what they can't read what that says. Oh, I heard that's a good book. Where are the customers' yachts? I heard somebody talk about this book before. Ah. That website you sent me, It says the store has been put on vacation by the store owner. Look at for this day trading DVD. Someone out there is selling it for $60. Elite Trading Store. Wow, he closed down his whole store. Probably got caught up. Yeah, I heard somebody mention this book. Your brain and your money. Hey, I have this book. I just bought this book. A Random Walk Down Wall Street. Ooh, this is an old one. Technical Analysis and Stock Market Profit. 1937. Yeah, this is an old book. The Technical Approach to Stock Trading. Definition of a stock chart. From 1937, you guys. Just goes to show it's all still the same. Advantages of making your own charts. This was back before they would have candlestick charts, bar charts. Yeah, they didn't have really any charts. They didn't. They had like line charts. Magazines which publish charts. Man, newspapers that would publish charts. Beware of early presumption. Number of charts necessary. Importance of minor movement study. This stuff is gold, guys. Going back to the early days, early 1900s, and seeing their perspective of things, and then I really enjoy doing that. pure technical action. We are not interested, for example, in the company behind the stock, which we are studying. We do not care. For our immediate purpose. Exactly, you guys. As I tell you guys, I don't give a fuck what these companies are about, what they do. We're trading them for today only, and that's it. We're not long-term investors. So we don't care what the companies are about. From 1937, this book. Whether the corporation manufactures mousetraps, tin cans, locomotives, or aluminum toothpicks, we are not particular as to whether it is an industrial, a railroad, a utility, or whatnot. Technically, the company behind the stock might even be in receivership, which its plant shut down entirely and making nothing at all. For our primary purpose of charting that stock, it would make no difference. So as long as the stock itself continued to enjoy fairly active trading in some orderly and well-regulated open market securities exchange, the reader must not get the impression that such fundamental factors are unimportant in trading. In analysis and forecasting, the most decidedly they most decidedly what should be taken into serious consideration when studying any stock or any stock chart for particular purposes. We merely assert that the stock chart itself has nothing to do with fundamental factors. It concerns itself solely within the stock's actual record in open market trading. As I say, I'm going to post that to the Discord in Friday's chat. That's from the year 1937. As traders, we don't care what these companies are about and what they do. I'll just put from the year 1937 when this book was published. Goodness, I didn't want to look at that. Even even if there were no saving of time and effort, stock charts still retain their greatness. Advantage, however, which is one of complete memory, if the individual were satisfied to spend his precious hours poring over the written or printed records of the past years trading in any stock as presumed above, he would still be under a terrific handicap of trying to remember the characteristics of February trading while looking at the record for October. Unless he had an almost supernatural memory, he would have to be constantly referring from one period of time to another in order to make any complete order or analysis out of his research. But if he uses a chart of this stock, how much simpler is his task? Here is a picture before his eyes in black and white, permanent, accurate, compact, a very picture which, without the chart, he would be trying hazily to recollect the construct in mental imagery. The stock's chart chief value therefore grows out of its being a particular record of trading history because it is a picture. The stock chart makes the past history of any issue an open book. Simple, easy to read, easy to study. It brings advantages similar in particular results to the telescope, the X-ray, the electric eye, and the other modern devices which save so much time and energy. Its fundamentals and details that make possible the transference of such energy into more productive channels of study and research. I wanted to read that one we pointed out earlier. Right here. This is a good one. Can you guys hear that in the Discord when it reads it out loud? When the computer reads it? Probably not. I think you guys can hear it on YouTube though. Let's see this one. Holidays on the time scale. I just highlight it like this. And then, where is it at? Right here. It says read aloud. And then when you click on that, it'll start reading it. And then you can click on the options and you can have it read to you super fast. You can speed up or slow down the speed, and then you could choose the voice. So I'll read this one aloud right here. I'll put my head, well, if you're on YouTube, you should be able to hear it. I turned on the audio, but on Discord here, you can't. I'm sure you guys don't like it when I read, because I be stumbling over my words a lot. Did you guys hear that? That may be a good idea too, to with some of these books just highlight it all, and then I can record it and it'd be like an audio book and you could publish it on YouTube. Yeah, back in the day they had to plot their own charts and draw them. Yeah, dude, definitely take advantage of that read aloud thing with the PDF thing. That's why when I heard the news too about that, who was that governor who was trying to she's trying to ban political people from trading in the stock market. It's like, you can't do that, you stupid ass. It's an open market for everybody. That's going against the whole purpose of it. You can't just ban. Sure, the stock markets are going to be rigged, but You have laws in place to, there's always going to be insider trading no matter what you do. No matter what you do. They can hire, you know, their cousin or second cousin to buy and sell the stock. They'll never know. Most of this book, though, like, let's see what he says here about patterns. Establishing the patterns. Oh, it's also to keep in mind, I'm using the web browser that I'm using is I'm not using Google. Man, it's, I don't know the name of this web browser right here. What is this? This is Microsoft's web browser. Yeah, I got a shitload of points. Dude, right here. Importance of volume. Next to the course of actual price range is the increase in volume or the activity of trading. We shall have considerably more to say about volume throughout our entire study, and especially in study VIII, which is devoted to the detailed study of volume action on reversals. A logical explanation of why volume of sales is important on reversals, however, seems properly in order at the beginning of our studies. Our charts and our study of technical action go back, as always, to the foundations in actual open market trading and the balance of buying and selling. We have seen that when buying is stronger on or heavier than selling, the price tends to advance, and vice versa. So while a stock is in a declining major trend, the balance of supply and demand is slightly on the supply or selling side. Until there is a change in the technical situation, this will continue to be the case. Oh man, let me unhook this. There, is that better for you guys? We're just looking at this book. Talk. This book is from 1937, dude. And as a reminder, go down into the education section, into the book recommendations, and on your desktop, I didn't even think to do this until Irish pointed it out. Click on that link that I posted in the book recommendation and download all of those PDF books to your desktop, dude. And when you download those PDF books to your desktop, dude, look at all these different books. There are so many PDF books in that link, man, and that's what we've been doing. We've just been going through and checking out all of these books. I mean, there are just so many of these PDF books. Wow, that one's from 1904. The Stock Exchange. It's a public domain book. 53 downloads in the last 30 days. This one? Okay. The first published was in February 1904. Second edition, 1906. The third edition, 1913. This is the third edition. The members and their clerks. Option dealing. A broker's day. Yeah, dude, that's crazy, huh? Power Hour in 1903. That's crazy, dude. But the great event of the afternoon is the reception of opening prices from the New York Stock Exchange in comparison with the Paris quotations that arrive about noon are uninteresting and the American market grows into a surging crowd between 3 o'clock and quarter past. Human nature never changes, man. It's crazy. I've always found it fascinating to just look back at history and finance and how they did things and how similar it is today. I didn't mean to scroll past that if you guys were reading that. The Broker's Day. Oh yeah. Yeah, this is a super old book. And it all started from just looking at theories on the internet. I'm gonna try doing that though. I'm gonna go through that folder and I'm gonna try to highlight the whole book and do an audio recording of it, and then I'll post it on YouTube for other people. Give me 1 second, guys. I just got a text from my mom. Oh wow. So I guess here in Michigan in the Flint area, I think it was like the captain of police or something. He got struck by a car and was killed. And on the highway there's a line of like, it just looked like hundreds of cop cars from all over paying their respects. It just happened today. all on the highway. I don't see anything popping off here for Power Hour. We had a few stocks we were going to keep our eyes on for dead cat bounces. IAA with the recent big sell-off, that's still getting drilled down. I'd keep that on watch for any momentum. And then we had Goodyear Tire, GT, same story. AFRM. A lot of stocks have been having real big sell-offs. Look at that. DWAC fell through that 80 bucks. The SPY took a turn for the worse after that morning consolidation. It's alright though, it's Friday. A big sell-off red day today could, some people say Black Monday. It's all good. We take it a day at a time. That's how we do it. BTU. Yeah, this one's doing really good. We got 50 minutes left. It's just starting to break out from its consolidation here. So I would say a pullback. Back down. Look for a continuation move on it. Once again, this is an energy stock. Can't hear me? I think you're the only one that's been complaining, or not complaining, just having issues that I know of. The rest of you guys, can you hear me all right? Let me see. Go down into your settings at the bottom, Hawk. Right here. Click your little gear next to your name. And then go into your voice and video. And then make sure your output is to wherever you want it. See, I have mine going to my headphones. Or maybe your cat is playing with your cord. She clawed it and put a hole in it. Yeah, chasing BTU up this high, that's pretty risky. A pullback down to like 1650s. Yeah, AFRM did lose a lot. But remember, just because it's sold off a lot doesn't necessarily mean it's a good buy. We've seen a lot of stocks in the past fall off and never come back. You guys remember Discovery? DISCA, DISCK. These stocks sold off a long time ago. maybe just be where it's plugged in. Do you plug in and out your headphones out of the jack a lot? Because I used to do that all the time, and I had to go off and I had to buy a dedicated headphones. That way every day I'm not plugging it in and out of my desktop. It wore out the magnet part of where I would plug it in on my desktop. I'd go from my Xbox to my desktop, plugging it in and out, in and out, in and out. So Discovery, this sold off way back in March 20th. And then all the way till next year. So 1 year, 9 months, this thing just didn't do nothing. Now it's just starting to get its up move. And just notice how it's slowly building in levels. That's what I like to try to look out for. So it's making lower lows, lower highs, perks up there finally, comes back down. It's still holding trend, but then it just slowly starts building, then pushes up, and we just start making higher highs, higher lows. That's what I like to look out for. Now we're trending up. So just take it in levels. Weekly chart, same thing. And all this really technically is kind of like the famous Dave's. Draw your trend line out that I taught you guys. And when we get that trend line crossover, look for it to pull back and then hold that trend line as support. Now it's been bouncing off of it back up. So we'll probably get another pullback down here to like 26. Keep building. And then in the future, we'll break out potentially out of this and get a run up here to about 40. This is a long-term swing trade, though, probably. Do you want to tie your money up that long? DOCU. DocuSign. Yeah, look at that. From about $300 a share down to 120s. Ew. But DocuSign, sometimes I gotta look at the legit, like the foundation. Like all DocuSign is, it's an app to sign important document papers. You can easily do that with third-party apps like Word. I mean, it's not necessarily an important thing to have, in my opinion. The value did go up on it. Now it's crashing down. I personally think the whole time it was up here, this is super overvalued. I do not see DocuSign being that important. I mean, sure, it's a handy tool to have, but there are other things out there that do the job for free. See, once again, draw your trend line out. See how it broke up out of that downtrend and then pulled back and held that trend line and pushed right up off of that. Now it's pulling back just like Discovery. Yeah, if anything, it'll see a bounce back up to about 150. That's where it'll run up to. Let's take it a level at a time. Look at KR. I was drawing trend lines way back on this thing. We going back. Kroger. Kroger's all over here in Michigan. I don't think Kroger... Is there Kroger? I don't think there's a Kroger down in the southern states. I think it's like a Michigan thing, or the northern grocery store. Same thing like Myers. Doesn't necessarily mean it's a good buy. It may be a good buy. Yeah, I like that, Rome. EK trade. What I do here, all the education and all the tools and all of that, I give to all of the members here who come over to the Discord. So there should be a link down in the video description of the video there to take you here. And then just start right here at the start here. Work your way down. Learn how this server runs, operates, and you should be all set. There's tutorial videos in here. Like I've said, I give all the members all the tools that they need to do the job. Audiobooks, book recommendations, trading DVDs. I mean, all this stuff. It's all there for you. Just got to put the work in. Yeah, this Kroger one's been a good one. Slowly, as I keep maturing in my career, I've noticed my range in stocks has grown more and more. It used to be back in the day, I would only focus on stocks that were under $1. Then I went from focusing on stocks that were under $5. Then I went to $10 and under, and then $20 and under. Now I focus on stocks from $5 all the way up to 100. All your speakers blew out. Yeah, 10-year-old speakers. I think it's time to get some new ones. Yeah, dude, I remember Spartan too. What about the Jolly Green Giant one? Is that what you're thinking of? The Jolly Green Giant grocery store? There was one right around the corner from our house. And Farmer Jack. There was a Farmer Jack here. Yeah, Michigan only or Ohio, northern state grocery stores. Let's take a look at the UVXY. Oh, wow, yeah. UVXY last 2 days had a good move on it. Today it really got up and going when the SPY started to fall apart. 1450s all the way up to 1750s. That's a good $3 per share run. And then, oh yeah, don't forget to tell Hawk too. I don't know if you can hear me, Hawk, but Irish learned something new today and he shared it with us. And I even learned something new. Let me see if I can go up and find it real quick. Unless you comment it real fast. I'm sure I'll be able to find it. There you go. I got it. I'll just reply to it. Here it is. Yeah. The VXN is for the NASDAQ 100. So you guys know, normally I track the VIX. That's the fear gauge for the S&P 500. And for you guys that track the NASDAQ, you're going to want to focus on the VXN. Yeah. See, even myself, I just learned that. But I never pay attention or track the NASDAQ. It's just natural. I've never tracked the NASDAQ. I've always just tracked the SPY. So you guys always track both. So yeah, learn something new. It'd be money sign, VXN. The NASDAQ Volatility Index. It was a good morning this morning for a few stocks, but then after they topped out, everything crumbled. DraftKings had a good move. We still got 30 minutes left in the day. We may see something. And then DCFC. This stock just got destroyed. Just like KSCP. You may want to keep it on watch though, because it's like right at that area where it started to break out right here. Just near that 10 bucks. So you may see a little bounce off of that. And then Rome traded, he did really good today. He traded a new name IPO. He picked up on the theme. HTCR was the name. Check out this bad boy. So yesterday it opened up. As we were talking, see how it wedged out all day? Well, Rome caught on that it was gapping up this morning and it was breaking up out of this consolidation wedge. So right at $5, that area. And then this morning it got real tight. Made a very, very tight wedge right here. And Rome said he got in 520s, got it in for a nice 80-cent explosion. That was a good trade on his end. Fantastic job. Paying attention to the theme. of what's been going on. New name, newer IPOs have been the theme. But also, if we go back, DCFC did the same thing as that last stock. See, if we zoom out on this, this stock was in play for 2 days, and then it sold off, and you guys see how it went sideways there? Well, this morning it made it look like it was getting a gap up and gonna get a nice explosion in the morning. But as soon as that market opened, this thing just tanked. Just flushed down. 1450s flushed to 14, 1350, 1270s, all the way down to 11. Man, you imagine somebody holding on to it that long? Then it went into a long consolidation phase here from 10 a.m. to 1. So 3 hours it went into this. And then now it's going down even lower. So you got your morning move and then your rest period. Stock's taking a break. And then it continues pushing down lower. I've literally been sitting here for 5 hours. Look at KSCP. Oh my goodness. This stock did not bounce at all. Straight up all the way back down to where it started. This reminds me, guys, of JMIA back in the day. When JMIA first opened and it IPO'd, man, I wish I had that chart. Let me see if I have it. Hold on. Go to my playbook. Nope, I don't have it. Do you remember that, Irish, back in the day when JMIA opened and then it slowly decayed all the way back down to its lows and bounced off of it and went on an epic rally? This is the same exact setup and chart. I just don't know if it's going to happen again. Let me see if I can I know I posted the chart in the past. We talked about JMIA so much in the past. Damn, that's an old ass speaker, bro. That's like fucking high school days, dude. Throw that in the back of your trunk. We're going all the way back to the beginning of 2019. I don't have it. Damn. That's a big speaker, man. That's a huge speaker. Yeah, that's badass. Just trial and error of building a speaker. Yeah, the first one sucked. Go back to BTU. Still just lingering around up there. Buying up this high is pretty risky. Yeah. Oh, and Hawk, don't forget, go down to the stock screener section. Lay down at the bottom. We did a lot today. A lot. Go all the way down to the stock screener here, and we built 3 new stock screeners. We built a 50-day and a 200-day moving average daily squeeze. And then we tweaked with our range swing scan that we made last Friday. And then we made hot stocks today. 2 of those. Yeah, we did a lot today. I showed up late today. Market opened up. I shut my alarm off on my phone and didn't realize it and went back to sleep. I woke up and it was like 9:50 a.m. So I just got up and just jumped on, and we've been streaming ever since. This DWAC, boy, it's got range. Good build off of this level here. Give me a second. Let me answer this phone call. Yeah, JMIA. Yeah, when it was put out, it was the Amazon of Jamaica. And then it exploded, and then people found out how shitty they were, and it was just a knockoff. And then that stock was wild. $79 up to 81. That's a $2 range on DWAC. Markets are about to close here in about 19 minutes. Damn. Yeah, AMD's getting drilled. It's just about to kiss its 200-day moving average. You may see a bounce off of that. But it's in a confirmed downtrend. Yeah, man, a lot of stocks been getting drilled heavily. Heavily. Look at all that constant volume. That's insane. Oh my goodness. AMD, this is a super popular stock. There's a lot of people out there that just trade this one stock. We were looking at Sava this morning. As it was pulling back. Yesterday it had a big explosion and then it pulled back. Had a good move after hours. We were keeping an eye on it today. Just simply draw out there. We liked how it was holding up at that previous day's close and it was getting super tight right here. We could have seen a nice snap from this 53s, 54 up and test 55 and maybe break up through that. But it never happened. It fell through. And then down she went. It's almost this setup right here on Sava. When you look at it, it's almost the same right here. The tight pullback in the morning. It's the same as that DCFC. Remember when we were watching that before it squeezed and how it was setting up? Right here. Right there in the morning, setting up like that. It's almost to the T, the same pattern. And that's what we do out here, man. We are looking for patterns. Familiar patterns. A lot of stocks got drilled down with the SPY ticking lower. LCID is having a deep pullback today from 28 down to 25. $3. AMC had a good move today. The last 2 days it had a good move. Or look at that, all week. But today we were looking for AMC to run up to 20. It ran up to a high of 1970. Still a good move off of it. Right off of that 1850s area. 1850s. That's why you should really just focus on just the area of interest. As I tell you guys, 1850s is trying to build off of that. And from that area there, you could have been putting your stop down there at 1825. It didn't even touch it. It's a nice $1 rip. So you're risking 25 cents to make $1. That's $1 or more. That's a good risk versus reward ratio. That's why when I say to you guys, focus on these levels, it helps with your risk versus reward ratios. Rather than stressing yourself out and trying to pinpoint it down to the exact penny. And as we said, being a cheap ass, getting in at 1850 and you're only risking 5 cents, but you want to make $1. It's like, dude, get out of here. Don't know if you guys already talked about this in the Discord. White House says credible prospect a Russian invasion could happen within days. I haven't heard anything. What's that all about? Yeah, Russia has been posturing for the past few weeks for an invasion of the Ukraine. Well, I mean, to me, that's their business. I don't know all the politics and all of that. LMT up on that invasion news. I know there's a good Russian band out there if you're into death metal. Slaughter to Prevail. A dude can scream. LMT looking to push up even higher. If you look at LMT, that monthly chart, you got a squeeze going on with the moving averages, the 50 and 200 day. On the daily chart, I'm sorry. Looking to squeeze up higher. Goodyear tires trying to gear up here for a bounce, but it's too late in the day. I wouldn't swing this stock over the weekend. Hell no. You don't know how the markets are going to open up on Monday. And with all of that going on, if any of you guys are considering taking a swing trade, remember, anything can happen on Saturday, Sunday, and markets could, it'll hurt. It'll hurt. So always keep that in mind. To me, it's too risky swinging over the weekend. Anything could happen. It's out of your control. There's a lot more to it. It has to do with, it has to do we US meddling, wanting to bring ballistic states into NATO, supplying Ukraine with missiles and weapons, and Russia doesn't like it. I see beyond the BS, and believe me, we wouldn't like Canada or Mexico becoming allies with Russia and moving weapons, missiles there, as we would take it as aggression. And believe me though, neocons seeing this as an economy booster, but look past what they are not telling you. That's why I've been seeing a lot of memes with the Canadian flag upside down and something about truckers going to the border in Michigan to drop off supplies. Makes sense. It has to do with the vax mandate for truckers exiting Canada. Ah, you see. Just goes to show you how much I keep up with the news. I don't watch the news at all. I don't. You guys are the ones that keep me updated. Oh, looks like YMAB's trying to come back for a surprise squeeze. If it blows over 850, that's your level. But on the daily chart, the stock's still in a confirmed downtrend. See, even when you scroll out on the 10-minute chart here, you can pretty much easily draw a line. See how it's still in a confirmed downtrend? So if it does break over that 850s level, this will run up, or has the potential, I'll say, to run up 950, then at 10, just over 10 there. And then if you get up over 10, you got a lot of levels to get through. So I would take it in like 50-cent intervals. It's a lot of overhead. Maybe it comes within play next week. Maybe we wake up Monday and it's gapping up and we get a nice squeeze in the morning. Oh, and it's only got 12 million in volume today. Not much at all. BKKT, this one, pretty much the same thing. Oh, wow. Look at that daily chart. BKKT. 7 days straight. And this is why it's important to use that 50-day moving average and 200-day moving average on your daily charts. It's the most popular moving averages out there. Everybody uses those. See how that blue line, the 50-day moving average, how it's just pretty much cuddling it? But consecutively, this is up. It just broke this long downtrend here. So a nice pullback over time. We could pull back down here to 4, bounce off that 4 up to 6 or something. But from here, for any type of move higher, I would say a nice pullback to 6. And then bounce off of that up through that 50-day. And then we could run up to, shit, we could run up to $12. Potential's there. Just have to keep eyes on it. 6.3 million float. DWAC, look at that. That was a good rebound. But then look at that death candle. From 79, good run up to 83. Nice $4 grind. But 83 flushes to 81. It's a $2 death candle. A good move. Right before the market closes, let's see what the popular stocks were. AMD, I bet, is one of the top. Number 4. SPY, Tesla, AFRM, AMD, Nvidia, Qs, Apple, Facebook, KAVL, and SQ. This has got to be a pump and dump or something. Yeah, this stock is a pump and dump. $0.50 range on it today. $2.50, just under $3. That's it. Markets are closed. Wow. 5.5 hour stream. That's one of the longest streams I've ever done. Twitter's getting beat down too. After earnings yesterday. Looks like a lot of hardcore selling going on with Twitter. Just look at how tightly this thing is. That's telling me there's a lot of extreme selling pressure going on. Yeah, I'm right behind you, VW. I'm done myself, man. Yep, 5.5 hours streaming straight, dude. Thanks for hanging out. I'm gonna get off here and take a break. I need it. I gotta eat something. Alright, guys, good stream today. Definitely. Talked about a lot. We made a few screeners. We looked into the books. Good way to close out the week. Yeah, a very productive day. Thanks for tuning in with us